Hey, Harry, we're live.
Oh, sorry. Hi, Nick. Welcome back, everyone. Welcome back to the Academy. Just before we get going into today's subjects, let's have a quick word from our sponsor, as in, here's the disclaimer. Hello, and once again, welcome back to the Academy. Today's subjects. Well, on Friday, we had a slight recovery on Powell's comments. The market was in a bit of a downturn, has been obviously all the week. Lots of stories of capitulation going on there. A few hedge funds having few nightmare days. All of those things going on. A little bit of blood on the streets. Nick, I just wanted to get your thoughts on what's currently going on. I mean, is this kind of what you worried about and you've been mentioning in your grey market talks with Torsten since I think going back to like November time? Is this around those lines?
Yeah, this is exactly what I was worried about, actually, because this is the effect of taking policy 180 degrees from where it was to where it is now. Now, ultimately, this may be good for the economy long term, but in the short term, you're doing some pretty chunky things, or are you saying you're going to do some pretty chunky things? And firstly, people don't really know what the effect of these tariffs are. Originally, Besant was saying, well, if we introduce tariffs, that's good for the dollar. Sort of my comment was, well, if it's good for the dollar, everything that they're trying to do for getting people to set up production in America, they need a lower dollar. And for sure, the dollar has collapsed. And, that's possibly indicative of something that is going on right now that perhaps was going on. We saw that in August last year with the carry trade story. So, is there repatriation? I think there is. So I think that's part of the story of what we're seeing. The other part of the story we're seeing is, people have figured out so late that if you drop your deficit from 7% of GDP to 3% of GDP, and the economy has been sort of, used to getting all of this money from the government in some way, shape, or form, forget whether it was, sort of on useful long-term projects and perhaps it was going to wasteful wars, wasteful money being spent in the wrong way and for the wrong reason. Forget all of that. The money was finding its way in the economy, and you go from 7% to 3%, or at least that's what you're telling everyone you're going to do. And people have figured out, well, that's bad for growth. And then you say, well, but surely they knew all of this stuff. Well, yeah, but then the Atlanta Fed issues GDP now. Of course, everyone's sort of basing it on data. If you listen to the Fed, they only react on data. So they kind of get hit on the head when something sort of changes from where it used to be. And the Atlanta Fed previously was expecting real GDP of somewhere, 2.5%. And everyone was kind of happy with that. And then suddenly you had a um, Atlanta Fed Atlanta Fed forecasting the GDP for Q1 2025, not 2 point what something, but minus 1.5. Now, of course, when people kind of look into the numbers, they say, well, what was the reason for the minus? They say, it was all to do with imports. And it was, we can ignore that because obviously they're trying to jump the tariff story. And so everyone said, Trump's coming in, they're shipping a load of stuff, and we can avoid at least a couple of months worth of tariffs by just buying it up front. And of course, there was this partly also influenced by the volume of gold that's been shipped from UK to US. I mean, we have to still figure out why is that. I mean, there are almost certainly other reasons for that. But of course, you can argue that real GDP minus 1.5, it's going to be a one-off. It will all be fine in the next quarter. This is just a one-off. 1 week later, Atlanta Fed, GDP now, minus 2.8, I think it is. So hang on a minute. So is this still to do with exports? Possibly. So there is a little bit of export in there. But actually, if you look a little bit deeper, the PCE element, so if you think of the formula for GDP, consumption, investment, government, exports and imports, those are the factors. So we talked about the net importing being negative for GDP, but the consumption part, which the US economy is consumption driven, you'll see the PCE numbers starting to come down as well. Well, what's that driven by? Basically, it's consumer sentiment coming down. The Doge committee is, rightfully saying government is too big, let's make it smaller. But the consequence of all of these steps, they're all negative impact on growth. So please, Trump administration, you've got some fairly smart people there. Please show us where your plus elements are going to be coming in. And of course, Scott Bessent, you'd expect him to say, well, this is obvious. We're going to cut taxes. We're going to do all of this stuff. And don't worry about it. Well, he just comes out and basically said, well, you've had 2 years of 20% stock market returns. Stop fussing about, being flat for the last quarter, or, there's going to be an adjustment process. Well, okay. When does that adjustment process end? And what's at the end of that adjustment process? I think the communication could definitely have been better. And yes, it is obvious. And this is basically what everyone needs to kind of get to grips with. You're moving from, and he's said it, an economy which was basically stimulated by government spending. So this was a government spending growth, forget what everyone else tells you. And now you're transitioning, hopefully, to one which is the private sector driving the growth. But unfortunately, that's the part of the formula where I think the communication is missing, because we've only had communication on tariffs, we've had communication on crypto reserve, we've had communication on Doge spending cuts and all this wasteful spending, but there has not been a peep about the other parts of the growth formula. And therefore, all the investors are sitting there saying, well, we can see that the G in GDP is sort of likely to suffer. Well, when is it going to start to grow, Mr. Bessent?
Yeah, I mean, it seems to be, if I can coin the expression, silly season. It has been for a little while, and we've had conversations back and forward on this. It just seems to be swinging around all of the time. Do you think, I mean, I have my own views on this. When you're hearing all these nightmare stories, when you read The Economist and you see that front page headline, if you will, when I start seeing things like that, when I start to see the perma bears coming out on LinkedIn and X and saying, right, that's it, it's all done and dusted, the bull run is over. Um, it almost screams at me that there's going to be a short-term bounce. So I don't know what would you feel from here?
Well, that's interesting. I mean, we talked about, I think you said earlier about the weather vane of Bitcoin, and perhaps we should all look in that direction. And in the S&P, when we look at the S&P, I can see a case for, perhaps one more small low next week, Monday, Tuesday, before we do get a recovery. But the question comes, how much do we recover? So is the bounce by the dip? This is another August the 5th event and off we go. Or is this something where people are still unsure about that? And so they're going to be those who are going to be loading up the boat for a new hire. And they're going to be those who are basically going to say, we're just going to wait, and then give it one. And I think my, the nature of this fall, or the shape of this fall, certainly has some kind of concern that maybe the maximum we'll get to is some kind of, I don't know, 100-day moving average, 50-day moving average thing, just say 5,900 or wherever it is on the S&P, before we might have another go on the downside. If I just sort of take a step back and say, one of the things that I focus on for long-term price action is what are long-term cycles looking at, and the long-term cycles for the S&P are negative. So there's a 41-month cycle, which is let's just say turning or ready to turn, but the timing of this thing could be plus minus, or certainly plus 6 months, because we're already at the 41-month level. So that's first thing. And secondly, there's an 18.6-year cycle, which comes in towards the end of this year. So the long-term story for risk assets tends to sort of be more negative towards the end of this year. So we've got to navigate the beginning of this year, and this is the tricky part. So we look at Bitcoin because for now Bitcoin has also, as I say, been kind of a signal for everybody about risk appetite. And when there is risk appetite, you tend to see it in Bitcoin. When there's plenty of liquidity, you tend to see it in Bitcoin. And so, what's Bitcoin doing over the weekend? And I sort of look over to my right here. My daughter keeps on asking me when can I buy Bitcoin? I keep saying, wait, and it's been going down. So I think we opened up the weekend at 88,000 for Bitcoin, and it's now at 83.5. So live price on my right, it's been down as low as about 83,000.
And yet we've had the Trump announcement on this, and everyone's like, "Oh, this is going to be fantastic." You talked about your daughter, my son. We've had this conversation before.
These are the big players.
Yeah, the big players out there. No, but they again, the questions are coming out, and of course it's based on this. But Trump said this, and it's going to be great, and everything's going to be fine. And yet here we find ourselves again in silly season where the narratives keep changing so quickly. It's hard to get a grasp on where we're going.
So yeah, good point about the announcement on from the Trump administration. What did they? I mean, people's expectations were clearly much bigger than what actually came out in the end. So there was a lot of, let's just say, we know that there's a lot of hot money in Bitcoin. There's a lot of retail in Bitcoin, and retail doesn't tend to kind of stick with things. Make a quick profit, they get in, they get out. We are less interested in the pure retail flows, and what we want to see from these announcements are things that will get institutional investors into the sector, the crypto sector. So Bitcoin in itself, Trump basically announced that he's going to create a Bitcoin reserve. And the original thought process was he was going to be buying 5% of the supply of Bitcoin. So, Michael Saylor was shipping in all of this Bitcoin in the hope that somebody was going to take him out one day, perhaps. Trump didn't buy anything. He just basically said, well, we're going to put in the little box, we're going to stick in there 200,000 Bitcoin, which we already own. We acquired these things through confiscation of, this and that and the other. But positive, they will not be selling any of these things. And you hodl, you're supposed to hodl this stuff. And we all know that as hodlers. So, and so he came out with, we're going to hodl it. And that's a good thing, because the Biden administration already sold, I think, about 200,000 of Bitcoin in the last couple of years, as did the German government. The German government sold 50,000 Bitcoin. So if you take these flows out, that's already a good thing. That's sort of good thing number one. Good thing number two, this is the largest, most powerful economy in the world, basically saying we are comfortable hodling crypto. So that's a good thing. what's coming next for the crypto world is legislation which will enable the US to play a bigger role in crypto, which means they want to have crypto-friendly legislation, which hopefully attracts the institutional investor. So it's not surprising that the retail punter has basically said, oh, you haven't said you're going to buy 5 million of these things, so I'm just going to lob them out at 95,000, and I'll buy them, when things sort of look a bit better. So I get that. But I don't think he's necessarily destroyed the story for crypto by not giving the full picture. But again, this is, investors in stocks, in the dollar, in crypto want to hear the positive case, and they kind of say, that we know you want to do something about growth, private sector, stimulating private sector. We know you want to sort of make America great, which will enhance the dollar. They've announced some things about the dollar. They want to issue stable coins and use stable coins as the mechanism to strengthen the dollar as a reserve currency and its use in international trade, etc. So how they do that, still okay, don't know. And on the crypto side, as I say, we're waiting for this legislation to excite institutional investors, and I'm pretty damn sure that that's going to happen. But until then, we've got to navigate the charts, right? So, news is one thing, but the real world is about sort of the psychology of those people who are buying and selling stocks and crypto today. So we really got to look at what's driving Bitcoin price action, and I think we can only do that not with narrative, but with charts.
Yeah, absolutely. I mean, as you've just said, the communication is just not clear. People are expecting things, they're expecting clear statements, and it's almost like there's a promise dangled out there in front of us, and then when you actually hear what's being delivered, it's not quite what was promised. And that uncertainty, of course, the markets hate uncertainty, and that's what we're seeing right now. In terms of all the markets, not just Bitcoin. I mean, Bitcoin obviously falling over the weekend, stuff like that. But this uncertainty, this lack of clarity, and we want strong words. We've got this strong statements coming out, but not as clear as we really want them to be. And that's I think the issue.
Yes, indeed. And I think they're all, as I say, super intelligent people in the administration, and they probably do have the answer to a lot of these things. Why they're not being so transparent is, confuses me somewhat, because even if you say we're going to transition to to the private sector, well, show us what you're doing. For example, are you going to be sort of having tax policy? Taiwan Semiconductor said they're going to invest. When are they going to invest? SoftBank said they're going to invest, and so on. How are they going to invest? What are they physically going to do? How is the administration going to help them? We talked about it before, about the infrastructure. Germany have just figured out they need to sort of an infrastructure fund. The US definitely need an infrastructure fund more than anyone, I would say. So, these stories do need to come out. And I think whilst I'm not a story guy, because I've become more of a chart guy, because it's less confusing, even though it is confusing at times. I think they definitely, as you say, can do a lot better, because, as I say, they're certainly not dumb people. They are, highly intelligent people. So, as I say, charts. Should we have a look?
Yeah, let's have a look. Yeah, I think it's the only way to go, because whilst the narrative is unclear, price action has to trump. So yeah, let's have a look at the charts.
Price action of Trump, but as a
Yeah,
pun intended.
pun.
Right. Well, okay. Let's first look at. I hope you are going to be able to see this. Here we go. So, can you see
Yeah, all good.
an orange line and a blue line?
I can see those. Yeah.
Great. So that means I'm on my other screen. So I'm going to be looking away whilst I sort of explain what is going on here. And you probably see my cursor, I hope.
Yeah, we'll forgive you for that. So we're just going to keep an eye on the charts.
Yeah, don't look at me. It's the wrong profile. So the blue line is money supply. It's not liquidity. Most people say, oh, money supply is liquidity. It's not liquidity, it's money supply. But it does tell you how the economy is moving along. M2 is sort of the money in the economy. Liquidity is money in the financial system. So the blue line is money supply. The orange line is Bitcoin, right? And they're not in sync, or I have at least in time-wise, I have shifted them across. And there's a few YouTube videos from guys who have said, well, what is the shift? Is it 50 days? Is it 76 days? I saw a video of 76 days. My one's at 80 days. Because money supply, is what money supply today influences something sometime forward. And what this chart is effectively saying is that money supply 80 days ago is influencing the price action of Bitcoin today. So that's what it's trying to reflect, and that's why they are sort of time, not in sync, as it were. But as you can see, in money supply 80 days ago had already dipped or was dipping around here and was, I can't even think what that would be. Never mind. Whatever 80 days ago was Christmas time or something like that.
Is
So
that 80
money supply was
days?
very weak.
Okay, yeah.
And obviously Bitcoin price came down, and where it is today kind of is in sync with where money supply had been bottoming in this sort of range. What's that? That's about a month range where money supply had kind of stayed at the same kind of low level. And so going forward, what we're looking at is, well, if this thing is true to how this thing has moved in the past, then you've got some tailwind, let's just say, for the Bitcoin price. Now, why is global money supply increasing? Well, there could be a number of reasons, but the big reason I would sort of suspect is that, how do you calculate global money supply? You've got to convert everything into one currency. So when you do that and the dollar is sort of lower, then the foreign currency value of the dollar equivalent of the foreign currency value of M2, of China, of the ECB, of UK, is going to be rising. So the weaker dollar has always been viewed as good for risk assets. And you can see that here. It's good for risk assets. There's more liquidity in the system. There's more, it's a plus, right, for risk assets. And so we're expecting something similar at the moment. We're moving in the other direction. Why are we moving in the other direction? As I said before, because I think there's been a lot of repatriation of funds, out of German government bonds, out of US stocks, and back into your home turf, wherever that is, either China or in Europe. So from the money supply data, put it this way, then we've got at least some. Stop sharing now. We've got some tailwind for Bitcoin. Okay, so first tick, where is Bitcoin right now? It's still 83,500. There you go. The other factor that influences Bitcoin, as I mentioned before about the cycles for equity markets, there is a cycle for Bitcoin. So, just sort of why are people influenced by cycles? What are cycles? It's a much bigger discussion. Cycles could be we as human beings may be influenced by sunspots, by what's going on in outer space, by planets in alignment. We know that recently 6 or 7 planets were all aligned. Did it coincide with the top of the market? Probably did, actually. So there is some influence on us as human beings. I'm not sure that I fully understand why. So there's a number of cycles that are always sort of influencing markets. So if you think a market is made up of noise, so Trump tweets, if you like, a cycle, or many cycles, different cycles all influencing us, and a trend. So those are the 3 factors that influence. And, with Bitcoin, like everything else, we can look at the current cycle. So I'm going to share what that current cycle looks like, and I hope I get the right chart. So this is the depiction of the current cycle of Bitcoin. I hope I have it right. Is that right? Is that current price? Yeah, so it's roughly where we are, 84,500 a few minutes ago. Yeah, that's about right. And so these purple lines that you see are the cycles. If you want to learn about cycles, go and watch the videos from the Foundation of Study of Cycles on a Monday and Tuesday night from the Foundation. Very good. And you learn a lot from them. But, I have access to their sort of cycle tool, and this cycle tool basically gives you see on the right-hand side of my screen, all of the various cycles that are influencing the current price level of Bitcoin. And the current price level, I'm just taking, here I could choose another cycle here. You can see we're at a low, so that the next phase in the cycle is positive. I can choose the second most. So there's a filter here which gives me what the first choice cycle, the second choice cycle, third choice cycle. As you see here, they're all kind of bottoming out. So consistent with the so this is only daily cycles. So consistent with the money supply, where we're kind of bottoming out, sometime in March, the cycles are also suggesting that there is a low in the cycle, and we can, look at the. I'm not going to do this thing with the info box where you look at how effective the cycle has been in the past, but as I've looked at Bitcoin, it does tend to follow the cycles quite well. And one of the beliefs from, if you like, it's probably a bit more than a belief, from the guy Lars von Tienen, who created the cycle analyzer. What he did was he basically looked at, in order to say that something is influenced by cycles, it at least has to repeat 3 or 4 times. And what he discovered was that over a long period of, since the existence of Bitcoin, Bitcoin has followed a certain pattern in the cycle. And that cycle has been 5 cycles up, 3 cycles down since, 2010, whenever it had started up. So, and these are 200-day cycles. So I'm just putting up a 197-day cycle here so you can see it more live. And what that effectively is basically showing is that the last crypto winter that we had was basically ended around here at December 22. And that was this sort of low, the third cycle down, if you like. If I just go back 3 and say, well, look, that was the last 5th part of the up leg. So there were 5 of these up legs, and then 3 down, 1, 2, 3, and now we want to see 5 up. So 1, 2, 3, 4, and so we are sort of at the sort of fairly low point of this 200-day cycle for Bitcoin, and it suggests that the last of the 5th, if there is going to be a 5th, put it this way, is sort of in the summer of this year. So again, we're looking for roughly at the end of this month, the 200-day cycle to give Bitcoin some tailwind, put it this way. And the fact that one of these lines goes down doesn't necessarily mean Bitcoin price goes down, could just go sideways because in a bull market. But in this particular case, you can see that the price has gone down. So there's going to be some tailwind coming from the cycles of Bitcoin. I'll stop sharing that before I get out of my depth. Cycles is not my thing, but it's one of the things I'm spending a lot of time on. So I think it's really important. The last thing I do is Elliott Wave, and I will share with you the chart that I've been, which I think has worked particularly well, throughout the grey market talk videos that I've done with Torsten, where we talked to, this go back to the summer or last March, in fact, 1 year ago, people saying, when shall I buy Bitcoin? I was like, wait till September or whenever it was. And then we had a low, in fact, in August, that was the Japan event or non-event. And then the market took off. And what I'm seeing from still my interpretation of the price action, so that we don't get caught with stories and narratives where we can be fooled quite easily, is that I originally had a target zone up here, yeah? And we went to that target zone. So technically, it's done what I said it should do, right? But at the moment, I can count. I have to say that this thing ends when I count to 5. Now, for a guy like me, it should be easy to count to 5, but I'm struggling. I only get to 3, right? So I've got 3 up here, which means I'm looking for a 4, and then I'm looking for a 5. Now, what I don't want to see is that this 4 exceeds more than 38% of what I've called the previous third wave. So wave 4s are very shallow retracements. Wave 2s are much deeper retracements before we see the final high. So and you know, we've just gone slightly below that 38%. That was at 82,000, but that was a spike low. Current price is still around the 83,500 where we are here. So we are at a level where I don't want to see prices drop much below this before I would say, perhaps there is something else going on. Perhaps, I don't know if I've got the count here or somewhere else, if I just sort of show the the short-term count very quickly. One of the interpretations I've got is, let's just say that was the high of 3, and then this is wave 4 being counted here. Can you see it, by the way? I hope you
Yeah, I
can.
can. Yeah, yeah.
Okay, that's great. So, we did some videos on triangles. I did a video, I remember, on triangles, and this one's full of bloody triangles from January of this year to today. I'm seeing this. Look at this. It's sort of, I have to redraw this. Hang on. What I'm seeing is, let's just try and update that. I hate it when I do that. But anyway, what do I see? So the high here was the third wave. Then I saw an ABC. This is wave W. This B wave was the triangle. And then the X wave here is a triangle, A, B, C, D, E. So for those who have looked at the triangle video, A, B, C, D, E. There are 5 waves, but in letter form. And then we need a wave Y. So we do W, X, Y in it's a combination for you Elliott Wave geeks out there. For those who aren't, so Y can take the form of an ABC, which is just simple A, B, and then C down, or it could be a triangle. So I've drawn it as a triangle again. So, and the reason I've drawn it as a triangle, for what I said earlier, if it is something that goes A, then B, and then C down, then C will probably go below that 38% retracement of the third wave. That will make the wave 4 a deeper correction, and that will tell me that this high, which I've labeled wave 3, may be something of, perhaps it's a wave 5, and I'm going to get a much deeper retracement. And that's, we want to be, on the watch for, and we certainly don't want to get caught out with that. But so that is, I'll keep messing this thing around, but that's basically where we are. So I'm seeing this thing as let's just say it's a triangle. So from this high, 20th of February, 21st February, A, B, C, D, E, this E wave, which I can't sort of show you properly, but anyway, it's sort of here, is not allowed to cross the C wave. That's 81,500. And obviously, if it starts to do that, well, we could just mean that C is a little bit lower, and then we need to do D and E. Remember, we're looking from a cycle perspective to the end of March, perhaps for a low. But one thing's for sure, it shouldn't go below the A point here. And if it does, then we're probably going to be retracing more than 38%. Then that's when I get a bit nervous about calling this thing like a fourth wave. So I hope I haven't lost anyone here. I'm sure I have. But so fourth wave shouldn't be more than about 38% of third wave. If it's not a triangle in the current sort of ending phase, then it means it's something deeper. And if it's something deeper, then it's probably not a fourth wave because it's going to be a bit too deep. And that's what I'm sort of more concerned about. So I'm kind of looking at, I hope it doesn't go below 81.5. And I hope this is an opportunity where, like the cycles are saying, there's some tailwind, either now or in the next few weeks. The money supply, there's some tailwind coming in. So this is a positive, therefore, as a weather vane for risk assets. Perhaps this gives us a breather. We don't know. New high in Bitcoin, whether we see a new high in the S&P is still, I'm going to be watching this thing right now. But, as I said to you before, I kind of feel that S&P will probably get to the 50 to 100-day moving average as a retracement. And then we're going to have a look. And we'll probably do a video and talk about that. But Bitcoin wise, that's what I'm thinking. Was I a bit too, did you get that?
No, it's fantastic. I knew this was going to be a good conversation. That's why I wanted to press record on this because I hope it's going to be interesting to people out there. Obviously, with the Academy, we've got stuff on there about Elliott Wave. There's going to be more stuff going on there, of course, as well. So, if it did catch you a little bit, obviously you can just slow it down, go back, look at it a few times. But I knew this was going to be a good conversation. I definitely wanted to get it on the tape, so to speak. We always seem to find ourselves as we finish these conversations it's almost like a cliffhanger. I find it's almost like a cliffhanger where you're sort of leaving it where it's a critical point. We're at a critical point in the story, and it does feel that way. It was interesting you brought in the planetary alignments, and what was it, 7 planets in alignment? I didn't see them because I can only see a few of them. I think 2 of them were below the horizon, below the tree line, so I wasn't going to catch those. And I think one of the others you could only see with a telescope, which I haven't got. So maybe that's why I'm not being influenced so much. Like some of the stories we've had out there, they're kind of, oh my God, it's all over. We're going to hell in a handcart, all of those kind of things. So yeah, I'm favouring possibly a temporary low, but who knows where we go from here? Again, we're at that critical point, as you've mentioned, not only obviously in Bitcoin, using that as the weather vane on risk, but also the main indices as well. So interesting times, and I'm sure we will be coming up with a video next couple of days as we see the dust kind of settling and everything becoming hopefully a little bit more clear. But I'm not gonna hang my hat on that because, as I say, that with the narrative as we began our story, it's not clear. It's not clear.
Absolutely.
It's still choppy
we
times.
spoke about narratives. We spoke about money supply. We didn't talk about liquidity. Liquidity is the other side of the coin. Let's have a look at liquidity. I mean, dollar weaker is usually a good thing, but and we've got the German government, hello, spending money.
Yeah.
You don't see that. The Chinese will be spending money. So you've got 2 huge economies that need desperately, for their own reasons, to put money into their economy. And you're at a phase in the American economy where they are, taking some money out of the economy in the short term, at least. So, there is an awful lot going on. And so even though the negative macro picture from America, you do have a global picture which is less negative per se, assuming, again, these are more than just sort of words and then it doesn't all get caught up in the bureaucracy and people go and, start to form committees and so on. And never get things done. And of course, the Chinese economy and the German economy and the Chinese stock market and the German stock market have not been falling. And, certainly I've been, a big fan of the Chinese sector. I still am. So I certainly own more Chinese stocks than I do anything else. So is that the right thing? Does it stay, that way? I don't know. But I can see those economies being driven by different factors, and certainly their technicals are going a lot better than the American sectors. But I can imagine there'll be some bargain hunters. There's some, when you look at some of these stocks, people with, names, hymns and all of this stuff and ASML and whatever, you got to have them in your portfolio. Well, you got a huge discount now. Now go and buy them. Let's see what happens. I mean, I am not. I want to see the price action at the end. I mean, the narrative is obviously very good for these things, but we need to see the price action. We need to see these institutional investors come back in. Let's see.
Yeah. Once again, I'm going to repeat the pun, but price action trumps all. We shall see how that leads us in the next few days. But certainly, yeah, we'll be back. But thanks for that, Nick. It was a great conversation. I hope it's been useful for anyone listening in. And yeah, stay tuned. We'll keep updating the story as we see it, as we take our own views on this. But thank you very much, Nick, and we'll talk soon.
Indeed. Like and share.
Indeed, like and
Makes
share.
me feel
Please
good.
subscribe. Okay. Adios.
Ciao.